Hello, 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 everyone. Happy Thursday. How's everyone doing today? Good morning, Patrick. Good morning, Martinez. Good morning, Tony. Morning, Heinrich. Good morning, Royal Palms. I did see the good morning today, Royal Palms. Hello, Charles. Sorry I missed it yesterday in lowercase. Hey, Alan. Good morning, Connor. I should say good morning, also, Alan. I just said, hey, thank you for tuning in. Good morning, Options 22. Thank you, everyone, for being here. Oh, already to Thursday. Yeah, I was wondering what happened to you, Sterling. At home sick with either the flu or COVID, waiting on test results. Well, sorry you are sick either way. I hope you get better quickly. Thank you still for tuning in. I appreciate everybody who tunes in and helps the channel just from a learning perspective and a sharing perspective. That's what we're here to do. All right, let's get right to it. Let me know how the sound is. I took out one of the rugs in my office and it was a dampening sound from before, but now we're getting a little more reverb, but I'm rearranging a bunch of stuff. So we shall see. I'll have to be working on this again. Don't forget to hit the like. Thank you. Yes, now we get the initial jobless claims. Good. Yeah, the jobless claims, initial and continuing. There we go with Sterling. We're both a beat, a slight beat, but a beat nonetheless. What else do we have? That's really it. I mean, the market continued to drop a bit on that, except for the Dow. So rotation into the Dow, more safe assets, more of the mega caps going on. We have the S&P composite and services coming out at 8:45, 15 minutes after the cash open. Watch to see that 50 mark is very key. Expected to actually come in at above 51, at 51 or better. But keep an eye in case it does drop. That'll still fuel. If it does drop, that'll fuel the rate. We need more rate cuts. We have the EIA numbers today because of the holiday on Monday. We have EIA numbers postponed today, so if you're a crude trader, watch out for those. Then we got some bill auctions. I would recommend keeping an eye out at 10:30 in case we have long tail events with that. And remember, tomorrow is non-farm payroll Friday. So far today, mixed to down. With the mega caps, chips, besides Nvidia taking it in the shorts, energy stocks are rallying. So that's where we sit today. Walgreens Boots Alliance was down, triggered a double top that we looked at yesterday. Triggered before the close and then down with earnings today. We'll see if that gets it bounced into the open. So far, energy leading the way, followed by industrials. Again, a rotation into and healthcare, rotation into some safety plays. So this is a rotation so far this morning into some defensive stocks. I don't mean defensive as in defense stocks. I mean more defensively oriented stocks. That's why you also see the Dow up almost 20 basis points. So consumer cyclical and technology, which is our risk off play, rotation out of those into the other more defensive oriented stocks. Probabilities, let me just refresh this. I refreshed it a while ago, but let me see here. Let me see. I hope this echo is not going to be too bad. Probabilities 1, 2, 3, 4, 5, 6. Still 6 rate cuts with a 60% for the first cut in March. Fear and greed back into full-blown greed mode only out of extreme greed. So is it time to buy the dip yet? We shall see if there's any still potentially bounce setups. As I mentioned, Walgreens Boots Alliance was a beat, but gapping down last time I checked. Not much after the close. The only thing I'm looking at tomorrow is Constellation Brands, but that's not market moving. That's just from a inflation standpoint. Let's see here. Let's see. Good morning, George. Either Powell lied at FOMC or he was forced to be dovish. Well, oh, by the way, they have a little talk on that on the there's a new futures edge. I recorded it on Tuesday. It will be going up. I just got it in the email, so I have to download it and then post it after this. So if you want to just hear my thoughts, there's two guests. There's another one besides me on it, but Bob and Jim do talk about the Fed on that, so you'll want to probably tune in and listen to that and hear what is said. So that's where we sit right there. So far this morning, what I'm keeping an eye on. Now, yesterday did confirm this lopsided double top, but did not trigger it. Again, it's still against the rotation zone. In this being the case, I really want to see it close below the rotation zone, and then I'd be looking to enter on a bounce from a bearish perspective. We're at a very critical level in the S&P. Now, shorter term, we do have another little mini 4-hour potential double bottom against a 4-hour rotation zone. So I need a close on a 4-hour basis above 47.57, and that could be a potentially bullish play. Short term, I'd use if you're going into the open and you're a shorter term trader, this is where I just use your little reverse harmonics and really watch 47.39, then 47.37, 47.37 being very key. We drop below that 47.31, and then about 47.21 area. The major key next level would be around 4,700. The 50% retracement from the up move, and this is considering the roll, the gap from the roll. The 50% correction from there is about 46.95. I'm really watching 4,700, where the first target of the double is 46.99.50. So that's where that sits. Oh, great. Peloton's, that's going to save them partnering with TikTok. So, Zuckerberg sold 428 million of Meta stock. Oh, that's not bad. Bruh saying market crash this year. A crash is a very specific. Could it be just a decline? Good morning, Anissa. Thank you for tuning in. Is Bob planning on coming back here? It's more that it's the challenging in the morning. It's challenging in the morning to get everything coordinated. It's not that he's not here. It's just challenging to get something coordinated. It was easier in the afternoon. So we will have to see. Remember also, from a longer term perspective, the weekly cycle's still rolling over. So we could see another couple weeks down even with a bounce. This little 4-hour play, if it were to trigger, would just be a bounce play. At this point, the critical line in the sand that really has to get above is above 4,800 again before we can really get into more sustained bullish mode. NASDAQ just took it in the shorts with those unemployment numbers. You see the big drop at 7:30, trying to find a little base here on the 15-minute going into the open. So I keep an eye on that little high, 16,475 area going into the open. For any bounce play. The weekly rolling over also, but now looking like it's tackling the weekly rotation zone. And what else do we have? Very, very key support down here, about 16,400 to 16,410. Below that, we're looking at 16,330. Then below 16,330, we have 16,215 to 16,200. Bounce play, you now have key resistance 16,540 besides that little potentially mini 15-minute double. But any rally, watch the 4-hour rotation zone. Watch the 4-hour rotation zone, specifically the 8 EMA coming down into that area on any bounce play. The Dow, which you see, the Dow has held up the best. I mean, it has not come anywhere close to triggering its potential double top. Even with yesterday, held the 62.5 retracement level, no close below that, and a little bounce today with the rotation into the industrials. So that's let me go back to the daily. Sorry about that. If the Dow really breaks down below 37,390, watch out. If the Dow follows a breakdown, not today, but in the next couple weeks, watch out. we could get more an extended pullback. So today, on any rally, I'm just using the prior harmonics about 37,850, then 37,930. So that's where we sit. You break below this 62 and a half, and you, especially if we close below that, then I'm going to be targeting the bigger pullback, the short-term bigger pullback in the Dow. The Russell, which broke below yesterday, a very key support level, actually closed below the rotation zone. The Russell, very weak. See, this is why it was so, you have the December run-up, and then, like, what's changed besides the rollover in the new year? And, for tax stuff and all the purposes and year-end window dressing, what's changed? Look, this is already wiped out. Essentially, we're back to where we closed on Jay Powell's dovish FOMC meeting on the 13th. But what's really changed? We have not had that much more data. Efficient market efficient market theory is garbage, by the way. Sorry for getting sidetracked there. So on any bigger rally back in the Russell, it's 2000 to 2004 is the key resistance. Double looks like it's off the table at this point. I'd just be watching the 4-hour rotation zone. You get above this 1993 level, could be a nice little bounce to 2000, but this is a lot of weakness, so you're fighting the overall trend. Remember, daily cycles getting closer to bottom. The daily cycles could be starting to bottom tomorrow with non-farm payrolls, but then the weeklies, for any bounces, we still have weekly downward pressure. What's this? A super chat. Thank you, Jake the Steak. Merry Christmas and Happy New Year. Thank you. I'm a few days late with this. We just moved back to Indiana. Thanks for all you've done. Where in Indiana, Jake? You're not far from me then. Looking forward to Future's Edge. I'm so glad they're releasing it earlier now. Yes, they're releasing all those earlier now. Thank you, George. I'll give Bob that feedback too. Thank you again, Jake the Snake. Thank you for supporting the channel. Merry Christmas to you and your entire family. Let me know where in Indiana you are, if you don't mind sharing it. If it's personal, that's fine. Yesterday, closing above the 1375. Again, that's the key area I'm watching. If we try to put in the bottom, like trigger that little mini S&P double, I'll be watching 1375 on a pullback. If we continue a drop, 1430 is still key. You start getting above 1430, it could accelerate a decline. So far, this has been very orderly. What else do we have? The DAX. Watching for any rollover play here in the DAX, but we do have a little mini. This pulled back far enough, so it does have a little mini potential double bottom. And it comes to this decline from the highs on the second all the way to the lows on the third. That would take you back to the 50% level potentially. So watch for that to trigger if you're a DAX trader. That would be a 4-hour close above 16,759, and that's just for a bounce play. It has to get back above 16,935 to get more sustained bullish mode. Notes. Retesting yesterday's lows. Retesting the lows from yesterday, potentially setting up a double bottom. May never trigger, but that would be for a potential retest. The highs would need a close above 112.20 on at least a 4-hour basis. So that's the only bullish thing there. If we start dropping below yesterday's low, you see here on the daily rotation zone, if we do drop below that, I'm watching for a retest of this 200 area at about 111.12, 111.11. The yield, which I talked about, was watching for it to return to 4. Bounced off 4 yesterday, exactly to be 4,006, 4, not 6. Retesting here. If this breaks through 4.03 and then 4.099, so 4.1 is key. This already chipping away at it, so it could be trying to move up, but really to get more of a sustained run in the short term, it has to now close above 4.1, already hitting against that 4 level. Watch this, though. If it does reverse over the next couple days and gets a close on the 4-hour basis below 3.89, We could see a retest of the lows, the recent lows in yield. Now, what would that do? It would set up a bigger bottoming pattern potentially. So we'll be watching to see how it reacts here very close if you're a yield trader. Connor, what are you putting in here? Daily return for quarter year since 98 is that's very interesting, Connor. Thank you. Sorry, my eyes are a little blurry today. Super. Thank you very much, Lauren. Thank you for the super chat. Can NASDAQ make a 2% up move? It could. It could very well. I don't think it was going to get a more substantial bounce, and there'll be a lot of dip buyers at some point coming in. It could easily make a 2% up move. I would not count on it today. I'd be more watching, especially after non-farm payrolls tomorrow. If it's going to get a recovery bounce, one of those sort of rip your face off bounces, I'd be focused more on tomorrow with non-farm payrolls. Thank you. Thank you very much. I'll have a couple coffees on you, Lauren. Thank you. Keep an eye also, 10-2s. Yesterday retreated a bit, but I'm still watching this 25. I'd actually set an alarm there intraday. It's not probably going to hit there today or tomorrow, but really pay attention to those, the 10-2. And remember, for newer people, that's the 10-year yield minus the 2-year yield. That minus 25 basis points is key for the steepening. Dollar index. Little retreat yesterday off this key resistance area. Pay attention to the dollar. If it starts really blowing through yesterday's highs, could make a quick trip to 103. All right? And I got to flip these around at this point. Flip them. And the 62.5 is 102.05. So that's key on the closing basis. Looking to see if the dollar also gets this longer term bottom coming in. We're getting to close to a weekly rotation zone, so we could at least see a pausing area up here. All right. By the way, not quite to double top territory. I will be paying attention to see if we get above this 102.18 area, and then if we were to reverse back below this morning's lows or the European session lows, or yesterday's European session lows, then I'd be watching for the bigger pullback. Crude. By the way, I just wanted to show people who are trying to learn a front run on a percent B. Remember I said this technically wasn't 1.5 times the ATR, but if you're looking for with a big candle reversal, see how this one made a new low? Because this was a setup bar, and I think I talked about doing the 62.5 front run. If the next candle makes a new low, make sure you use the retracement for the close above the 62.5 on that level. So you see here, you see how I went from the high of the percent B bar. It would have initially been to that low, but I had to extend it. You get the close above that 62.5 bar, and then it just eked out a new high. So this is where, if you're trying to front run pattern, would not be terribly loose with the stop here, but that's how you use a front run on a wide range bar, on a percent B wide range bar, since it's really tougher to close above that high. And that's how you do it if it makes a new low. So you'll want to test that out for your own stuff. I just want to use this, not advocating that trade, just want to show you with what happened yesterday, how to do that. Gold, closing below that 250 area and holding there this morning. So I'm a little cautious in gold. Little extra weakness in gold. It has to now, from a shorter term basis, reprove itself. A little more. I'd be watching a close back above 2075 unless there's a shorter term bottoming pattern formed, which we could be getting a double, and that would be a shorter term bottoming pattern. We just don't have it quite yet. It needs to pop back down below 2043.3. When I say shorter term bottom pattern, that's exactly what I mean. Then if that continues, then that could be rolled up to a higher time frame. Still, yen's getting interesting. Keep an eye to see if it closes above this 144.95. Could be triggering the double. Could be a big shift in the yen there. Euro, not much to watch besides keep an eye if it does close above yesterday's high would be an aggressive %B buy. So it could be a little bounce trade there potentially. That's the key level I'd be watching, yesterday's high. Already rejected there once. The pound is just a mess right now. Spiders did not confirm yesterday the double. Keep an eye at 467.82 if we trade down there this morning. If we close down there 467.82, it would be a triggered double with and the rotation zone would be out of the way. Other than that, right now I'd be watching on any rally for the gap fill 468.75. We're trading 468.42 pre-market. And then key area, then I go 469.34 and then 470.50 would be the levels I'd be utilizing on any rally. Also, if you wanted the minor levels, if we do break down, this is where I'd still use your reverse harmonics and use 466.60 as the first level. Qs, which had gapped down today. Interesting enough, the Qs stopped just above the 50% retracement from the lows on December 4th to the highs back on the 28th and roughly retraced 50%. The key line in the sand, though, is 394.01. You close below 394.01. I continue to watch even after a bounce for a continued decline. Anywhere between this 397.79 and 394.01, I'll be watching for a bounce play, especially tomorrow morning. Today, the key areas is back to 397.79, then to the gap fill to 398.34, and the major key resistance is back at 400. Hope that helps right there. Targets on natural gas, that gas on daily. Natty gas. Where's Natty? There's my Natty gas. Targets on Natty gas. Natty gas breaking out. The next key target is 294 area. 293.9, 294. Any pullback as long as it holds 2.62 support, be watching for another rotation back up. But your next target is 294. I'm just going to call it 294, just shy of that. And then you have a prior breakdown area at about 303 and then 311. Thank you, Christoph. Thanks for calling that out, Christoph. We got Christoph with a K and Christoph with a C. How many periods do you use in the ATR? I use two sets. I use a 5-period ATR and I use a 21-period ATR. Okay, north side of Indianapolis. That's Indianapolis is a great city. I really love Indianapolis. Trading for a living. Yeah, that's one of the books I'll be giving away. I'm giving away my trading collection. I know I got a couple emails I still have to deal with, and if anybody was within driving distance and wants to pick up some of them, then let me know. I'm not giving away one book, by the way. I'm giving away my whole trading collection. It's for somebody else or multiple people to utilize. So I do not need them anymore. You're welcome, Jacob. Let's just check in. WBA, Walgreens boots. Oh, it's going to complete the double. So it look at that. Triggered the double yesterday and completed this morning. And the gap fill on the gap down. A gap fill with a gap. Keep an eye also. NVIDIA yesterday triggered on an up close, which is a lower probability trigger, but we could be seeing a return, especially to 462, and then if it breaks down below 450, watch out. Apple, watching for setting up a bounce play. especially if we come down to if we get down to the 200 area again. It's filling some gaps left behind, but we'll be watching for a bounce and then another rollover play. Apple's really broken some critical support here, so this could be a sign, even on bounces, that the nature is changing out of some of these mega caps. So keeping that in mind. With that, I will talk to. Let's just peek at the S&P. I'll just peek in at that S&P. Well, we can't see that now, can we? What happened there? There we go. S&P. Ooh, double is barely intact. Let's see, 47.37. 40. It's intact to the tick, but if we take out 47.37, the double's off the table. The Nasdaq, that 15-minute double looks to be off the table. But just pay attention on any bigger rally to some of these breakdown zones, and the 4-hour rotation zone is key. With that, I'll talk to everyone later. Have a wonderful trading day. Remember, non-farm payrolls tomorrow, so don't do anything silly ahead of then. Bye for now.